Varun Kapur is in our studios. He's, of course, Managing Director and CEO of Travel Food Services. Varun, great to have you at the NDTV Profit studios on what has been a good quarter, to say the least. What has worked this quarter? Do you think it's also a bit of a seasonal play? This quarter is also important for the industry as a whole.
Right. Hi, Tamanna. Good seeing you again. And Rich, thank you for having me over here. So I think this, rightfully you said it. I mean, Q3 is when all of us are traveling. All of us are going for holidays. All of us are, that travel is quite peak. That's the nature of our industry. But I think it's no doubt what has happened very evidently now is we had a bit of a up and down year in travel. There was a bit of disruption that happened in Q2, led largely by, there was the aircraft maintenance issues that kind of happened after the unfortunate air crash that happened this summer. But I think post that, in Q3, we've seen this big comeback in travel. Actually, travel is trending positive again. So travel grew across airports almost 2%. So good year-on-year recovery. So I think that you can see in our numbers as well in the sales that have come across there.
What is fired up the most? And let's talk about sustenance, because if we talk about Q3 as being a typically strong quarter, are you seeing those trends now pair off in Q4 so far? Or with more and more airports coming up, and now you have the Navi Mumbai airport on board as well, are you seeing those numbers now persisting and sustaining for the end of the financial year?
I think very evidently sustaining. So, October, November, very strong travel. December, a bit, there was the FDTL regulations, the crew rest regulations that a bit affected, the largest carriers. So there was a little bit of disruption in December. Probably numbers would have been even better in that short period. But I think it's recovered very well. January trends are strong.
One would think this would, in a sense, be good for you because more people waiting at the airports for longer have to come to your restaurants and eat.
But, the amount of pressure, and I must say the teams did a great job on the ground because suddenly you had this massive demand and be able to cater to them. That's where strengths could play out, right? Larger presence, we had large stock, stocking done. So all of that played out quite well at the airports to support. But, then there was a period where flights were cancelled as well. So there was a bit of traffic drop that happened at the airports. But January is very strong. January, you can see the trends playing out very well. And plus new airports. Navi Mumbai has come online. Guwahati is expected to come. Noida, another airport, greenfield. So a lot of development, I think, both between government, private investment. Quite a strong period, I think, for the next few quarters as well in aviation.
Yeah, in some sense, I mean, they may be your clients or no, but if you look at the GMR Airports numbers, the non-aero revenues grew meaningfully for them, right? In some sense, an indication. Now, my question to you is, you said January starting off well. One would presume Feb to May would be a busy flying season, one for the weather and two as the holidays, summer holidays, etc., kick in, and all of that. Would you expect what you've done in the OND quarter, October, November, December quarter to get repeated in the first half of 2026, if you will?
Yeah, so exactly. So I think Q3, for example, you can see, so Q2 we had still had growth while traffic was down. Q3, we saw a 28% jump in our system-wide sales. Driven traffic, yes, but also consumers' confidence coming back, spending well at airports, plus a lot of new growth on our end, in terms of new wins. But also, I think the trend undoubtedly now and playing out into summer, which is again a peak period of travel, looks to be in a very good direction. So I think that undoubtedly should have an effect on our performance and on the entire, I think the aviation airport sector as well. I think that will play out quite evidently. That's what we see.
How do you see for a business like yours, let's say, for example, the trajectory of key metrics? One can, with newer airports coming in, would probably mean that margins would come off a little bit because it takes time to kick in. But over a period of time, do you expect operational metrics to inch higher? Do you expect return ratios to kick higher as economies of scale kick in? How does it work?
No, completely there. No, I mean, a very good question, and exactly, I think that. So the way it happens in our sector would be that we take about, once we start a new airport, whether it's a new airport or even an existing airport as it expands, it takes us about 12 to 18 months to hit our run rates of performance. So you can see that, we've been through a very, quite large expansion spree post-COVID. So you can see our numbers as well, that playing out now. So this year on year, for example, we grew 35% on the PAT side, while 28% was our system-wide sale growth. We actually grew 35% on PAT because of the operating leverage, because of many of those older airports actually kicking in. We've set up joint ventures both in India and internationally, and those are kicking in, which all have generally happened post-COVID. So you can see those operating leverage that kick in, which is exactly what would happen with new units. 12 to 18 months, you want to get it right. those stores, new brands, people come and consume. You get the staffing right in those units. Once you get there, you can see the performance metrics really ramp up. So that's, I think, playing out in our numbers as well. We continue playing out. A lot of the units we set up 12 to 18 months ago, the benefits would play out over the next few quarters as well.
Just to get because you're relatively recently listed. I mean, it's been a while now, but relatively recently listed. What is the revenue breakup for lounges and QSR? And for India and ROW, I think you have two international markets right now.
Right. No, I remember being in your studios around the time being listed, so it's not too long back, just in the last year. But I think it's been a trend where I think our focus continues on both those areas, because I think what's happened, both are two growth engines for our business. Complementary, because a consumer gets a choice today. They have a lounge option, but I think the way F&B and travel QSR is growing at airports of the great brands coming in. For example, we set up a Gordon Ramsay outlet recently at the Mumbai T2 airport. We're setting up a Wagamama, done both at T2 and Navi Mumbai. Brands like Nando's at the Delhi airport. So the type of brands coming into airports today, I think in Indian airports probably rival the best malls, the best airports globally. I think today, the way the Indian airport operators are running those airports, I think the best experiences on all fronts. So I think it's coming to a point where we're seeing undoubtedly both engines, both areas, performing equally strong.
So it's a 50-50, almost 50-50
Almost
mix?
50-50. Travel QSR is a bit bigger for us, about 55%.
Okay.
The lounges are slightly smaller, but it's generally been growing equally in that trend.
And India is the main market, or do you have now growth engines coming in? I think you're in Singapore and in other markets as well.
Yes, we are in Malaysia. We've got quite a decent presence there. We are in Hong Kong as well. We just opened our second lounge in Hong Kong in January. So we're seeing those markets play out. We've set up subsidiaries in the UAE and Indonesia as well, looking at opportunities there. So international, we see for the lounge opportunity especially to be a growth engine for us. In addition to Indian aviation, undoubtedly a big area, plus highways. That's another interesting area we're looking at. A bit more long term, but that I think is an opportunity for us as well.
That's something which comes in FY27, and does that add to your total number of outlets?
It will still be very small. We've entered. I don't see it being a meaningful part of our business just with the size of the aviation and the growth there. Probably over the next 5 years, not really meaningful, but I think from a decade horizon, probably highways are where India aviation was in 2008.
You mean setting up outlets across the highways?
Across the highways, setting up travel QSR outlets across. Because what's happening on highways is very interesting. The government and private investment is setting up expressways.
Yes.
And that is now captive audiences, larger developments of fuel, non-fuel, the retail, F&B. So for a player like us, who can get scale, size, larger investment, multi-brand play, I think that's a skill set probably over the next decade. So again, not meaningful in the short term, but long term, we'll do it prudently. We won't compromise our return metrics. But that's another opportunity I think that opens up for us from a growth point of view.
Sorry. No, it's just to complete off that point. Any number on the QSR outlets for FY27? Any guidance there?
So we've generally not got into giving guidance yet, but maybe from a perspective, we've opened 50 outlets over the last 12 months, travel QSR and lounges. We anticipate that to be better for the next year ahead, the way our already committed pipeline looks. So actually trending quite strong in terms of outlets growth as well for the next year ahead as well.
Are you giving any guidance for the numbers per se, FY26, FY27, FY28?
We haven't given
You're
guidance.
Not doing that
We're not giving guidance, but I think from a perspective where we are, we tend to see what we indicate is we tend to grow much better than passenger traffic, which is now again rebounding. So you see generally what tends to happen is passenger traffic
8
plus,
to 9%.
Yeah, 8 to 9% there. We tend to grow a bit better in terms of LFL plus net gains on top of it. So that tends to be our business model.
For a young company, a bit better than 8-9% would be, are you being conservative on purpose, or do you believe that that is the actual 5-year, let's say, growth chart, 12, 13, 14%?
So 8 to 9% is passenger traffic growth.
Right.
And what we would drive is probably over that, both from a point of view in inflation plus our own metrics. So for example, this time passenger traffic growth grew 1.6%. We grew 13% in terms of like-for-like, plus 13% of net gains. So we grew at 28% when passenger traffic was 1.6.
So if the long-term CAGR is 8-9%, Varun, sorry for pressing this, but if the long-term CAGR is 8-9%, what do you expect that the market should kind of, on a normalized scenario, expect your growth rate to be like?
So historically, we've had generally CAGRs over the last, obviously COVID's played out in between, but if you straight line, we've generally been around that 25% mark, 25-30% mark has been our CAGR over that period of time. Obviously, we had COVID as a blip, but if you straight line it, that's where we've trended. And aviation, I think, is being strong, if not stronger. So I think we're in a good place in the industry. I think we, as point our skill set, we've been able to show to clients and brand partners that we stand out and perform well.
So just to clarify, you believe 25% CAGR for the next 5 years is doable? Everything else going
right.
fine?
I think the aviation market, the traffic being a key driver. So I think that continues, which I hope should continue as well.
Yeah. And if 5 new airlines, new airports coming online is what the government is pushing as policy, then definitely that trajectory for the industry could continue. Thank you so much, Varun, for coming in. Pleasure having you in our studios.
Always a pleasure. Thank you. Thanks.
Thank you.